Growth is very difficult to buy today, especially when the gold price has gone from $2,000 to $3,300 in 18 months.
General thoughts on the gold sector. So price has been ripping. That's not normal for gold, right? Here we are at like all-time highs, and that is beginning to trickle down through the equities. The best-in-class majors, royalty companies, and mid-tier producers are now all rising in price. Do you expect the gold price from here to stay a bit range-bound at a very healthy price, I would argue? I don't think it has to go higher, but it might. What's your take on that? And then I always hear from investors that are impatient that the equities aren't ripping when they feel like they should, right? Gold's at all-time highs. Why aren't the explorers running yet? I interpret this bull market as like a textbook bull market. The gold price began to take off about 18 months ago, 2 years ago. The best-in-class majors and royalty companies followed suit. The mid-tiers are next. The funded developers are catching a bit. And it's like very logical and sequential to me, but everybody's always impatient. So what's your thoughts, gold price moving forward, and general health of the gold and silver equities market?
So I'll cover the gold market first. And, gold has always been viewed, I think over the last 20 years as kind of a hedge, a hedge against volatility, a hedge against geopolitical events, a hedge against kind of monetary debasement. It's always kind of been viewed as a hedge or almost like an insurance type of policy. I'm sure you've heard this before. I want to have 3, 4, 5% of gold exposure in the portfolio. That's kind of how it's been viewed. That's changed. And that's changed as recent, I think, within the last 6 months is when I've really seen kind of the perception change around gold. And what has happened is there's been a structural shift where gold is no longer seen as a hedge. It's seen as the de facto global reserve asset.